morning, everyone, and welcome to the European crossover webinar. And as I mentioned earlier, I'm not sure what happened because my mic was on, but nobody could hear me. But I'm not sure that they want to hear what I've been a bit under the weather. But we'll go on and quickly move right into the analysis here. I'm just going to cover real quickly, briefly, what we said about the dollar, and then we'll move right into the analysis. Says the dollar held near a 2-week low on Tuesday as growing concern over the trade conflict between the U.S. and China, hiding the safe haven appeal of the Japanese yen and the Swiss franc. The United States on Monday announced criminal charges against China's Huawei Technologies, escalating a fight with the world's biggest telecommunications equipment maker, which denies wrongdoing. Market participants are also focused on the Fed's policy meeting on the 29th to the 30th, where Jerome Powell is expected to acknowledge growing risk to the U.S. economy as global momentum weakens. Your dollar should be in a tight range for now, given the trade talks in the Fed meeting this week, said Kenneth Brew, currency strategist at Societe Generale in London. Also keeping the euro in the tight ranges are options expiring worth $6 billion between 114 and 115. Traders say any breach of those ranges would fuel volatility in the markets. Sterling edged lower before crucial votes later today in British Parliament. They're aimed at breaking the Brexit deadlock. And before we were covering the news, it was mentioning the key things that we're looking at is going to be the vote today, regarding Brexit, the FOMC, and then also the finalization of the talks on Thursday. So we'll probably see some pretty good volatility once we get past this area. One of the things that we were looking at when we came online and obviously doing the webinar over, and then we'll move into the analysis, was here on gold. We had continued to stay very steady here in gold. And one of the things we had looked at into the bias chart from yesterday, pop back over here, was the 1312 area here. Well, we're certainly making a move to that. And actually, I wasn't even going to push it out that high because I was thinking, okay, well, that might be a bit of a stretch. Came up right here, and you can see it here, 1312. We've made a pretty good run as we've already made up to 1309 in the XAU moment. Another mover also has been here on the dollar index, and we're referencing here that we'd come back to this key critical area, this 95.65 area here. We had mentioned before, if you look at it on the daily chart, we know how important that had been because we had already come down to 95.65, had a strong rally, came back and dropped below it only to recover. And as we moved higher, the one concern that we had, if we wanted to call it a fly in the ointment, was that we still were in a sell mode when you looked at it here on the exponential moving averages. Well, we finally turned around come on Friday, post ECB after the euro had come down into the 1291. That was like the 78% of that entire range. So let's move back in here. So we're going to start the analysis. As I said, I actually had to reboot my entire system to go in and get us going. I'm not sure what happened with the mic because the mic was showing that it was hot, although generally what I do is I reboot every night, but I've come down with some kind of a flu bug and basically spent most of the day resting. And instead of just rebooting, I just got up. I don't know why that would affect it, but that's what I had to go and do, even though my mic was still showing that it was working. I could hear it. I had my earpiece in and I could hear it. But certainly we weren't getting any audio. So apologies on that. Had to reboot the entire system. But let's go on and move on to the analysis. So we're looking at the euro, and we had support 1368 and resistance at 1439 here. We'll go and move in here to the daily. Obviously, we're holding up very well with the euro. Actually come into a key area right here. This right here across on the daily, 1445. That is a key area here. I mean, we'll further upside. We're looking at 1470 for the week, but right here on a short-term basis, everybody thinks that the Fed will pause or lay back. We might see this is not a bad area right here where some Euro bulls will maybe ease back a bit or maybe let this market work back a bit. But that would be key if we can get above this 1446 for right now. Now we're right there, and I'm not saying that that's going to stop, but I think that that could possibly ease where people may want to go in and take off a portion of their positions and let them may allow the market to ease back towards the 1420, maybe the 14 teens, as people think, okay, well, now I wouldn't be surprised if we kind of hang around this area here until, let's say, mid U.S. session. I mean, early mid U.S. session, and then maybe we kind of weaken a little bit because once again, I think most people believe the Fed will ease, but there's always that chance. And I'm thinking is that when we covered the Fed yesterday in the news story, the thought was that the Fed would go in and still say, hey, wait a minute, the economy's still going. We don't see anything to indicate that it's slowing down. So it's kind of, I think it might be like a bit of a mix. I don't want to say mixed signal, but they're now going to turn around and relinquish and say, okay, and let's now put the car in reverse. I think that they'll stay, what, the economy is still moving along. We're just exercising a little bit of patience. Probably they may mention more about, world markets and maybe a general slowdown. So with that being said, there's a little bit of a risk in here. So I think that we may end up seeing this pare back a little bit, from this area. The key level above, which is what we started out the weekend we were referencing, is going to be this 1470 here. You can probably make a case just a little bit higher right there. It's actually 1474. We're going to go and move it for today's resistance at 1474. But like I said, I wouldn't be surprised to see the market start to pare back going into the Fed. Not a whole lot, but, pare back as people take a little bit of a risk off here. So let's go with 1474. Let's go move into the 2-hour chart. This 1416 area has been key. It doesn't even seem like it's that far away either. We're going to go right there, 1407. 1407. I think the 1416, I think the market could bounce a little bit, but if you're looking for a little bit more deeper support, or actually, let's say if people were to say, you know what, I missed part of the move, I'll be happy to get in. I think that that's where you start to see people start to pull in a pop in a little bit. It would be around that 1406 area. So let's go and put that for our support. And let's go and move into cable now. Well, we're going to go and keep the resistance here, right here at that 3208 for now. If it wants to challenge that, I don't necessarily think it'll pop back. But then again, once again, we do have the vote today, so you may see a pretty good chunk of volatility. It's going to be 3208. We're going to go and keep that for support. We had 31.20. Market has really held up. Now, if we do hit some stops on a pullback, it's actually going to be right there at 30.83. That's going to be the initial support, 30.83. And let's go move into the Aussie. I spent most of yesterday resting, so I missed a pretty good chunk of this. So I'm looking on here myself. We had a resistance here at 72.10. And that is still going to remain. Yeah, 72.10. We want to keep that 72.10. I don't want the resistance to be that close. Ahead of the FOMC, we may remain in a tight range. So this is where the first real level of resistance is going to be. When we look here for the support, we did have 71.40, and that we know about that key level, and that's what they did. When they came down here, took out the 71.40 by what? Oh, about 2 pips, and then turned around and rebounded smartly. And there we are. So no changes here on the Aussie. It's going to be 71.40. And let's move into the Swissy. I've actually finally started going in pair back here. We've been looking at this for a while at that 99.23 area here. Well, we did make it down to that 23, and we just kind of vacillated on both sides, but you couldn't help but pull down. Actually, the Swissies held up very well if you think about it in light of what the dollar's done itself. So resistance here on the Swissy, it's going to be right there at 99.53. Well, I don't feel as bad as yesterday, but I tell you what, my voice isn't for nothing. Let's take a look. As far as support, well, you can see that coming right across here. It's going to be 98.92. 98.92. Let's take a look where we stand here on a fib. Excuse me. And we're just past the 23%. Now you see here the 99.82, 98.92, and 98.85 is at 38%. We're going to go with 98.85, and there's a little bit of a level right here, you see here. So we'll go with 98.85 for support on the Swissy. Let's now move into the dollar CAD. Well, we made a run back here for this 32.71. I'm not sure if we have that marked off as our resistance. We actually had 32.56. Actually, at the time, I wasn't even sure we'd make it all the way back to 32.71. Now, we're right here, though, at 32.56, but we made a pretty good rebound, and we were covering the news a little bit earlier when we had the issues with the mic. And like I said, I had to go in and reboot the entire system because the mic I was getting a feed off of it, but certainly wasn't transmitting across the webinar. But the whole thought was that, and we were covering on that in the news, was that Canada has so much to do with its exports, and the news was saying, the kind of story was saying, or the thought was that it's going to, if anything, it'll probably be impacted more so than other economies. So we turned around, we really did go and pop back, even after we had seen a relentless fall here. So on this pullback here to 32.71, I think what we did was we just triggered some stops that came in here, and then the market paired back and settled right around this 32.56, which is our resistance and where we're at right now. It was at 32.56 holding, but it's 32.71. We'll have to move that here on this resistance. Just move it just a bit higher. Support obviously is going to come in right here, coming right across. Let's take a look at here on the daily. We basically meted just about this came into about 50% of this entire body, not the entire range, but the entire body, which lots of times when I'm looking back, I'll see if it did of the actual body itself, not necessarily the range. You can see here, it looks like it came back to about 50% of that body for easing back just a bit. It's going to be 32.11 for the 32.11. And for right now, we're going to go move into the crude oil market. We broke past this area. As a market, we had looked at it on a little bit on a 2-hour, but also on a daily chart. And you could see where the market was just a bit tired up in here and really opened the door for us to move lower. Unfortunately, I think it's tough for those people that were long this market and really took a dip to clean them out. But you can see here, we almost had like a little gravestone doji here on the 2-hour, and from there, and the market already stalled in this area here. And then we rotated lower, and then we obviously hit some stops and even got past this trend line. We're looking at a little area of support here. Well, they blew even right past that before we got down here to this 51.90-ish area here. Market, I think this is more about just cleaning out some stops here, which crude once it gets to get on a move, it's pretty hard to go in and stop it. We dipped down here, we made it all the way down here. If we take a look on a very short-term basis, yeah, we made it right there to the 78% of that range before they found some support. Resistance is going to come in, you can see right there. 52.51. Well, we actually made it up here to 52.36, so fairly close. And they're trying to come right back up again. We're going to go right there, 52.62 coming across. You see that coming right across, 52.63, 52.63. A little bit of a mini hammer on that 30-minute. With crude, it trades so technical. And sometimes it can be a rather tough market to trade, to say the least. But it trades very. I mean, it's just a technical market. It's the best way to look at this market. So 52.63 will be the resistance, and you can see that coming just above this mark here, right there, which is 52.59. Support's going to come in right there at 51.66, 51.66 for support on the crude. Yesterday, we had our support here for the dollar yen coming in at 908. That 908 was a key area on the upside twice, if you remember that, coming in right here. As we challenged that area here a couple of times before we were able to go in and break past that. If you remember on the way up, this is where they made it up in here to this 908, and they dipped back. Some moved back. We challenged the 908 again. We barely pulled back, and then that allowed us to launch up. Well, we made it down here to 913, barely just taking out this low by 1 pip, and we've rebounded, and look, we're running into this trouble right here. Back at that 946 here on the dollar yen. The resistance we have, if it wants to get past here, is this 967. We're actually going to move that just a little bit lower here. It's actually going to move down to 960, 960. If we're able to goose some stops here, we don't see a whole lot beyond that. And you can see that coming right across would be 960. It'd be pretty tough road to hoe for the dollar yen to pop all the way up to 68. We're just going to move this just a little bit lower at 960. And And we're actually going to keep the 908. We'll keep the 908, which is just right coming in here. We're going to go and keep the 908 as our support here on the dollar yen. Yeah, let's go move into the Aussie yen. Well, smart rebound here back on the Aussie yen after the S&P surely got knocked for a good little chunk of change. But a smart rebound here after getting here into the 78. We actually had support at 78.19. Nice rebound. You know, we've tried to push back here, but we had taken a pretty good knock. Now, as far as resistance, for right now for today, looking now, it's going to be 78.62. And we're looking at it on a 30-minute. We have shifted into a buy mode here. Support on a short-term basis is still going to be the same right here, 78.19. We did clear out some stops here, but at least on a short-term basis until we can, and that's just going to be for today. We may finally start to see things push out once we get past, FOMC. But for right now, today, it's going to stay the same here, 78.19. It has turned into a bit of bullish mode. Had been in a sell mode here, but when you look at it overall, this market had come back. With that, we'll move into the dollar index. One of the things that we'd covered is if we were able to go and break beyond this 95.18-ish area, it's really going to open the door around down to move down to 93.75. And this market is just hanging on above this key area here. We're looking on the daily, and we've mentioned it so many times. We've come down to this 95.65 and saw this smart rebound, only to come back and lose it, and eventually even drop below it. Once we were able to defend, I think we'd even close on a Friday here. Once we were able to open up on Monday, this thing launched and we started taking off. We kind of hung around and just sat there, just kind of treading water. But the one thing we mentioned was, as we mentioned, it could have been a fly in the ointment, was that we remained in a sell mode on the exponential moving averages on the daily. Well, we pushed higher and then ran out of gas right at the 61% and this key 96.72 area coming across. And we've since faded, but now we're back here down to 95.65. And we're just hanging on right here, hanging on for a thread. Well, if we can go in and push beyond that, and we had our buy support really yesterday, it was already set up for 95.65 for a challenge to that area, and obviously we made it down there. If we want to try and push below that, I think that might be a little bit tough before FOMC. Yeah, we're going to go right there. 95.37. 95.37. But this is holding up like a rock for right now. I'm not sure if you'd see the euro pop even higher because the euro comprises 56% of the cash dollar index. So essentially, the euro is going to have to pop up to around 1470. Anything's possible, but once again, that would be the area for support other than right here. If they want to trigger the stops, you'd be looking for a move down to about 95.37. That would just about coincide with this trend line right here also. No change on resistance. This would go to the 2-hour chart. Once again, this is the pivot that we were basically vacillating on both sides over the last almost 2 weeks here. And so no change here. That's going to remain the same. The 96.08, although that's a far cry away, that would take one heck of a pullback to allow that. Probably would actually this to get order to make it a 96.08, you'd have to see the euro probably really at that support level we were talking about, which is 1407, is where you'd have to see that come in at. So this is going to remain the same. Let's go to the dollar. I mean, not the dollar, but the gold market. Well, we were looking at our resistance at 1312, and the way we came up to the 1312, we had this level coming in right here, and we just about almost made it there. Made up to 1309. Now, our short-term target is actually going to be this 1323. When we were first coming up here trying to challenge 13, we kept looking for 1304. That was our target that the market would eventually get to. We triggered 1300, and this was a good level here. But as we were able to get above this on Friday, I said, well, you know what? They're going to go on and try and push it up here. And this is, I think this is where they're going to want to get to. If you remember at the 61%, the market didn't even phase the market. It just slowed it down, but we didn't see a pullback. So that would open up the door for the next fib. That next fib is going to be the 1322, which is a 78% of the entire move of 1160 to 1365. That coincides with 1323. So there's where we're open to moving to now. But for right now, we're going to keep this the same from yesterday, which is 1312 for resistance. And when we look for support, we had 1295. We're actually going to have to adjust that here. Well, I think that's pretty clear where that's going to be right at 1300. And that might even be tough to get to at this point with the momentum that's going with the gold market. And let's move into the bunds. For bunds, it's been traded in a fairly tight range now. If you look at this with bunds, resistance is going to come in right there at 64.81. Resistance not that far away is going to be 64.44. Came right into this support level right here, 11,159. We had 11,205, so we saw a pretty bit decent fall beyond that. This is where we had our initial support pulling back. Well, the market's already made a pretty good run here. Support would just be just a touch below that at 11,150. And you can see right there, well, they came right just to the 38%, 11,221. If we were to push up higher, that's going to take us right here where that 61% is. We'll actually push it just above there, which is going to be 11,265 for resistance. I really don't see it making up there in light of everything, but we'll see what happens. But the stretch level here is going to be the 11,265. And the euro is just hanging strongly from this area here. When we look at the euro once again, we have our resistance check here on the euro right there at 1474. It's a pretty good solid line here at 11,460. If they were pushing here, I think that you'd see some pretty good offset of some longs here, just ahead of the FOMC. We've talked about here this 1446. You can see it right there on a closing basis. Look, on a close, it'd be something if we can close about 1446 on a daily close. That's going to be, and that's why I would expect this to ease back a bit. Where can they go to, though? Maybe that 1474 is a bit of a stretch. Anybody, what may happen is, and we're going to actually adjust this, the closer they hang on here, anybody that stepped in and tried to short it probably have their stops just above 50. That may allow this move up to 1460. So I'm going to adjust this down from 1474 just to 1460 for the resistance. If we make it up there, I think you'll see some folks lighten up just ahead of FOMC. And the more this stands up here, we barely pull back. There might have been some people that said, okay, well, we've stretched it as far as we can. Let me go and take a pot shot here. 1435, 1433 to look for a move back down to about 1407. And then you see the market come back up and they see it close here and then it pushes a little bit higher and think, well, I guess I'll have to have my stops at 52 or 55. Well, when you step back in here, anybody who's still long saying, you know what, I'll take a little bit more off the table if we make it to 1460, or some people might say, I'll get flat ahead of the FOMC at 1460. This may be a pretty good little target for them to go and shoot at for. That concludes our bias chart for today. And thanks for joining us here on the European crossover. I had to reboot my system. I was pretty much out of it most of the day yesterday. I usually reboot it before we start. My mic was showing hot, so I'm not sure what happened, so apologies on that. But I'll go and get this posted in the room. And thanks for joining us here on the European crossover webinar.